Good morning, good afternoon, good evening. Welcome back to the channel where we talk about economics and crypto and lots of other fun things. In today's video, there's going to be a lot to talk about outside of crypto. I obviously have plenty of Bitcoin stuff and then an altcoin that is now on my radar for a specific reason. But then there's some economic things, some stock market things that I'm actually really excited about sharing with you today. So do me a favor, hit that like button, subscribe to the channel, all of that. But let's go ahead and dive on in. So a chart that I have shared, I think I shared this last week from On-Chain College, prices over 108K, at least when he tweeted this. And long-term holder supply has been increasing similar to the days before the price run up from 60K to 106K Bitcoin. It's buckle up time for Bitcoin. So whatever, I don't really care about the words in the tweet, but I do care about the chart when it comes to hodl waves. And what I want to see here is certain cohorts accumulating, getting to a peak. And then what happens is when they're at a peak, the price rises and the selling pressure increases, and then they decrease their supply across older cohorts, younger cohorts. And that's just typically what happens. You can see every major bull run, you see long-term holders decreasing in their supply, because if you have an asset that's up big, let me tell you, I'm sure you've experienced this before, it becomes more and more difficult to justify holding on to that asset. Even Bitcoin, especially in the early days, but even today, by lots of standards, that's the case. And so what's the all-time high for long-term holder supply? You can see it was in around September of 2024. And then that led us to October, November, the big pump in November, December, peaking at 108. And then a little bit of a gully here, but you can see we're almost back up to that level of the previous all-time high. Maybe we'd go a little higher, or maybe we'd get exactly there when it comes to all-time high for long-term holder supply. Regardless, we're close. And so it's for that reason, among many others, that I have flipped. I am bullish for the rest of the year. And honestly, for Bitcoin, I'm bullish until things get ugly economically. And that timeline tends to move a lot slower than what I usually think. And so the chances that it's going to happen, we have about 6 months left in this year, the chances that it's going to happen in 2025 for Bitcoin, that things would crash really, really hard, it seems unlikely. 6 months is not a lot of time. So let's just keep on going along like we've always gone along with Bitcoin. This cycle has not proven itself to be different with Bitcoin. With altcoins, totally different story. But we'll see what happens next. On-Chain College, in many ways, this cycle has rhymed closely with the 2017 cycle. The four most dangerous words, hey, sounds familiar? The four most dangerous words in investing are, it's different this time, Sir John Templeton. And so what do we see? We see many similarities to the 2017 bull run. The 2017 bull run for Bitcoin was climbing the wall of disbelief until Bitcoin, climbing the wall of worry, disbelief, until Bitcoin just went parabolic, and then it was all over the news. Everyone was excited about it. You can see very similar metrics here with this oscillator of Bitcoin bottoming out in the bear market and then just kind of hanging around in overbought territory until it got really, really exciting, and then that was the peak. So similar, not entirely the same, but similar with this oscillator, pi cycle top and bottom indicator. You can see, a bottoming out, FTX collapse, or a little bit before the FTX collapse, and then a climb, and then a generally high period for a couple of years now, for almost 2 years, about 2 years. And will this end? We'll see. Will it end with the pi cycle top and bottom indicator, the crossing of the 111-day moving average with the 350-day moving average times 2? I'm not sure about that. That's going to take a lot of upward price movement, but we'll see. So this time so far, proven to look like 2017. We'll see how that goes for the rest of the year. Moving on. Something I found to be of interest from Quinton, mega bull, Quinton Francois, $1.4 billion will get liquidated if Bitcoin reaches $110,500. And that is a point of significant pain. That's, I mean, think about that. All right, $1.4 billion. Do you understand what that means for Binance, OKX, Bybit, and friends? That means that they make $1.41 billion. That's what I mean when I say the market maker always wins. Because these are people, when they invest with leverage, these are people who are putting it in putting it in with a possibility that they're not going to get anything in return. So who wins on the other side of that? It's the market makers, and they win with violent swings in both directions. And so maybe this is the direction that it's going to go. Lots of pain above. Unfortunately, now, I mean, this is, well, is it unfortunate? I don't know. This is mostly whales, but there is a lot of pain below as well, below 104, below 105 for Bitcoin. There'd probably be some liquidations, and that's fine, you know, if we go below that level, according to this heat map here. But the closest max pain to us is higher, not lower. Moving on, so Bitcoin Vector, the tide is turning in the favor of the bulls, but... All right, so is this a bearish post? I have a take on this post. On-chain strength is the missing piece. Without recovery in fundamentals and key components, liquidity plus network growth, upside remains speculative, driven by leverage, not conviction. Bulls need more than just structure control to sustain this move. So Bitcoin fundamentals, weak fundamentals, fewer, not less, fewer participants, declining liquidity. That's just reality right now. But this is on chain. This is, I mean, everything's on chain. Even transfers between wallets is on chain. But I don't think this accounts for OTC kind of transactions. That's what I would say. So we're seeing heavy. I know I feel like a broken record when I say this. Another casual $500 million worth of Bitcoin was bought by the ETFs yesterday. We're seeing heavy doses of that happen. And weak fundamentals, fewer participants, declining liquidity. Retail is just, they still don't care about Bitcoin. It's so ridiculous. You don't care about Bitcoin. I mean, maybe I'm talking about you, I don't know. But what you care about is you want the other stuff. And my request is, yeah, sure, I have plenty of altcoins. I go in and out of altcoins all the time. But like, you got to have some Bitcoin, man. Because that's what they're doing. That's what the people, you know, the smart money, that's what they're doing. They're acquiring Bitcoin. So I don't know necessarily how much we need this, that we need fundamentals, participants, liquidity, because the amount of participants may be fewer right now, but the pockets of the participants are much bigger. So moving on, I'm intrigued. What is this? This is Maple Finance Syrup. Some of you have asked me about this on my live streams. I've looked at the chart. I don't know if there's I don't remember if there's anything specifically from the chart that stuck out to me, but this stuck out to me from RWA Guru. This is a big reason why I made very good gains on Pendle and on Ondo in 2024, and I do have high hopes for both of those still. It's TVL. It's Maple Finance TVL, $2.697 billion. That is not an insignificant amount of money, especially for cryptocurrency with the market cap of Maple Finance. You can buy this on Coinbase, by the way. Look at their TVL. It's exploding. This is the kind of thing, when I look at TVL in comparison to price, I'm quite certain, I'm not entirely sure, but I'm pretty sure, very sure that the market cap of Maple Finance is not anywhere near 2.7 billion. And yet here we are with their TVL exploding. I don't expect a full one-to-one correlation with the price, but I expect something for something to be affected with the Syrup ticker. So just keep that in mind. Moving on to economy-related stuff. Charlie Biello, the U.S. money supply grew 4.5% over last year, the biggest year-over-year increase since July of 2022. After a brief hiatus, money printing is back. All right, let's tone that down a little bit. You can see here that where we are right now in terms of year-over-year growth in the money supply, U.S. M2 money supply, is actually it's below average still. All right. So people asking where's the money going to, because somebody asked that cliched, tired question on my live stream today. Where's all this money coming from? All you have to do is look at money supply. And yes, we are up year over year, 4.5%. But historically, the average is around 7% of an annual growth rate of money supply, which should probably lead you to think that the actual annual growth rate of inflation is 7%, but that they mask it. But we're still below average, and I think that's even been reflected a little bit in Bitcoin's price. Because if we were on par with similar cycles, we would actually be a decent amount higher than $108,000 Bitcoin right now. Just something to know, some food for thought. I mean, look at how much lower it went in 2022 after that massive spike in 2021. And I think this is a new norm now. This is why, you guys ask me when's alt season. I'm like, I don't know. I don't really see it out on the horizon. I see alt moments on the horizon. I don't see full-blown alt season. But here's the deal. I think this is our new norm, where you see COVID crash, 26.7% increase in US M2 money supply, followed by a negative 4.7%, followed by, I think in the future, potentially, 15, 20%, something like that. Maybe even 26%, we have some kind of great financial crisis. I think this is our new norm of just these wild swings of increases in money supply. And when we have those wild swings to the upside, which it will come at some point, it will come, that's when we're going to have full-blown 2021, 2018 alt season. I'm not calling for 26.7%, but I am calling for more than 4.5%, honestly, of an increase in money supply. So just something to keep on your radar for sure. Moving on here, we have from Donovan Jackson, the party is just getting started, QQQ. I'm really just sharing this chart to point something out, that the NASDAQ 100 hit a new all-time high 2 days ago. The NASDAQ is right there. The NASDAQ and the S&P. This is this is such a significant thing. This is what has caused me to change my perspective as to whether or not I believe that 2025, the end of 2025, is going to be bullish or bearish. I know I'd had this thesis since 2022 that 2025 was going to be rough, and it has been rough so far. But that the end of 2025 was not going to be a good time to hold Bitcoin and to hold others, certainly with altcoins. This is what has convinced me that my thesis was wrong. Or, I think a different way to put it is if Kamala was president right now, that we would have gotten to that bottom level in the NASDAQ and the S&P much slower. I am absolutely convinced that we would have gotten there no matter what, and that tariffs just accelerated, and tariff fears just accelerated all of that. So then by the end of 2025, that's where we would be. But it happened so quickly with Trump as president because of all the fears that came into the market right away. So we've gotten through that, and now V-shaped recovery. This is a V-shaped recovery. I thought when we originally went through this, I thought it was going to be, a bounce back, a relief rally, but a rejection at the 200-day moving average. We're beyond every retrace. And so it only makes sense to me, especially with the NASDAQ, considering, the techiness of Bitcoin, that if the NASDAQ is going to break out, Bitcoin is also going to break out. I mean, Bitcoin is leading the charge, really, because it already did hit a new all-time high, and the NASDAQ hasn't. So this is a chart of the NASDAQ 100, did break a new all-time high already. And we've seen, there was another chart. I don't think I have that on here. No, that's a bummer. Another chart that I saw just was highlighting kind of like a breakout of a trend, and then a back test over the last several weeks here, or several days, and then perfect back test, and then bounce. So things are looking pretty good, very good. Another thing, stock market related, the NASDAQ 100 is at an all-time high. It was down 20% less than 3 months ago. These sharp rallies tend to be bullish. And so I love looking at these charts, guys. These comparisons to previous times around. The most dangerous words you could say, right? This time is different. And is this time going to be different? Because what you see, all right, let's look at 6 months later. 1991, 20% drawdown, but reached a new all-time high, 11.94%. 6 months later, a year later, 42.02%. 1998, A year later, I've talked a lot about that 1998 correction, the V-shaped recovery. 1 year later, the NASDAQ was up 88%, which there's a lot of correlation between right now and 1998. Another comparison would be 2018, which we don't have on here. It didn't go down 20%, I suppose. But then 2003, 22%, 2009, 14%, 2020, 40%, 2023, 34.98%. It would make sense to me that the NASDAQ would rise, the NASDAQ 100 at least, would rise another 40% from here, honestly. And if that happens, really, it would make sense to me that Bitcoin would also rise by 40%, by probably more than 40% from where it is right now. More than 40%, 150,000, something like that, maybe even higher, 155. 2.618 retrace on Bitcoin is a key level that I'll be looking at. That's $155,000 exactly. So maybe that's it, or maybe it goes well beyond that even. Who knows? We'll see. But things are looking good, guys. Just ride it out. People were asking me on my live stream yesterday, oh no, it's dumping. What's up with this dump? Bitcoin went from like 108 to 107. Come on, guys. Come on. Lance Roberts. Now, here's on the other side of this mega pump. All right, let's say the NASDAQ does pump 40%. Let's say Bitcoin goes up to 155, maybe even beyond that. Here is the downside to this. Is the other side of this is going to be really ugly. And this is, to me, proof that the other side of this is going to be pretty ugly, really ugly. Lance Roberts, S&P call option volume has become completely unhinged while speculation is currently working, which is drawing more investors into the scheme. This will eventually have very bad outcomes. Eventually. Now, what can we credit this to? I would say easy access is for the most part the big reason why calls and puts and all that have come more in favor now. If you don't know what I'm talking about, that's options trading. It's like trading stocks, but on steroids. If the steroids took steroids, honestly. If you've ever been to Wall Street Bets, that's what they do in Wall Street Bets. It's gambling. A lot of it is just straight up gambling, unless you buy leaps, which is options that expire. Just do your own research. I don't want to take too much time because I think most of you understand this. But there was something that happened right around where my mouse is. Do you guys remember this? This was 2021, early 2021, GameStop insanity. That's where Wall Street Bets, the subreddit, because I was involved in Wall Street. I looked at Wall Street Bets every day until GameStop. And then that subreddit quadrupled in a week. And I knew from then on it was going to be fundamentally different. So I don't go there anymore. But I was in on GameStop. I made a lot of money on GameStop. I should have made more. I didn't round trip, but like at the peak, I think I made like $200,000 that week. But then, all the shenanigans happened. I walked away with certainly less than 100,000. But Wall Street Bets gets popular. People start learning about options trading. That's where I learned about options trading, was Wall Street Bets. And boom, off to the races. Now, this is not good. This is still not good. This is something that we need to keep on our radar because on the other side of this is a collapse of this kind of degenerate. This is froth, guys. This is lots and lots of just absolute froth. And there's going to be a reckoning with this. There's going to be a reckoning in a lot of ways. This isn't even anywhere near my primary concern over a period of time to where a collapse in this, it's going to get ugly when the time comes. What's something you can pay attention to? Well, Kurt S. Altrichter, CRPS. Every recession in the last 35 years started with a violent drop in the 2-year yield. We're not there yet, but we're dancing on the edge. The 10-year, 2-year spread is bull steepening. Okay, I think that's good. If the 2-year breaks lower, it signals the Fed has lost control. That's your cue. Watch it closely. So watch for a downward acceleration in the 2-year yield. You see the 2-year aggressively move down. That's your sign. You saw that every time. All right, 1990, aggressive move down in the 2-year. 2000, aggressive move down in the 2 year. That was actually in 2000. Okay, so that was after the peak, barely after the peak of the dot-com bubble. When did it start? In the aughts, a little 2007-ish. All right, so this is a new homework assignment for us. We pay attention to the 2 year yield. I have that on my TradingView account. Just pull it up on TradingView. You see that having a sharp, aggressive move down. Watch out. Now there have been many fake outs too. FYI, many fake outs, but something to be mindful of. Okay, lastly, Michael Saylor, another Bitcoin post. I think this is just ridiculous. Bitcoin will become the largest asset in the world in the next 48 months. Easy 10x. Huh. Really, Michael Saylor? I mean, I'm not a hater of Michael Saylor, but he does get ridiculous sometimes. So what does that mean? The largest asset in the world? Well, gold is right now the largest asset in the world, more than 10 times the size of Bitcoin. So there it is, $22.484 trillion. Some inflation in there too, about 2% annual return in inflation, or annual inflation rate. Bitcoin is number 6 behind Amazon, Apple, Microsoft, Nvidia, $2.132 trillion. So within 48 months, Bitcoin's going to do a 10x in its valuation against gold, not in its valuation against the dollar. So if it was in its valuation against the dollar, that's over a $1 million Bitcoin. But in 48 months, let's say gold doubles from here in 48 months. If Bitcoin's going to 10x, or I guess it would 20x in that case, I would think that gold would be much higher than where it is now. So Bitcoin could potentially be at $2 million in the next 48 months. There is a 0.1% chance in my head that something like that would happen. What would contribute to that? I mean, again, accumulation, lots and lots of accumulation by major players. And we're going to see more of that projected in 2026 and 2027. What a lot of you are calling the bear market, we'll see. Okay. So, we'll see about that. But moving on, Bitcoin, 107. Today's a red day. I'm looking at a 5-minute chart. Okay, why did I do that? 107, it doesn't surprise me that Bitcoin would, I mean, really, look at today's green candle. All right, I'm making this again on the day before you're watching it, most of you, aside from members on the channel. This was bound to happen. I am not surprised at all that we're seeing a little bit of red today. I know some altcoins are dropping more than Bitcoin. Shocking. Bitcoin's dominance at 65.7, kind of flirting with making a move higher. This is just what it is right now. You know, maybe they'll end quantitative tightening in July officially, or in September. I wouldn't mind if it was July. Next meeting after that would be September. They do have a Jackson Hole annual meeting in August. I doubt that they do anything significant at that point. But it is what it is. Things are looking good, guys. I want you to hear that from me, even for altcoins. So let's ride this out. Let's see where we go from here. Anyway, that's all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.